It's been a disruptive week in the media world. Pearson selling the Financial Times to Nikkei, and now word that Comcast is talking with several new media firms for possible deals. For some insight, I'm joined by Martin Sorrell, CEO of the advertising group WPP. Martin,
good afternoon.
So nice to see you. Do you think we will see a lot more deals now in the media space?
Yeah, I think you'll see a lot of deals in the client space, as you put it. You'll find them in the media space, and you'll find them in the agency space too. So I think tepid growth, lack of pricing power because of lack of inflation, all adds up to focus on cost. And when you run out of cost ideas, you look at deals in order to increase market share. Having said that, in the media area, obviously there's some stresses and strains, particularly in the area of legacy or traditional media. And clearly some of the traditional legacy media owners are feeling the pressure. In the case of Pearson, I don't think they could invest sufficiently to develop and maintain the FT and develop and strengthen it. So Nikkei is a surprising buyer. One would have thought that somebody like Michael Bloomberg or maybe Axel Springer, mind you, they're caught up with maybe ProSieben, maybe a more logical deal for them moving into television and uniting that with newspapers and digital newspapers. But Nikkei, a private company, male-dominated, pretty sort of private and secretive, but obviously challenged by lack of growth in Japan. So this is like people say Suntory buying Jim Beam or Dentsu buying Aegis, paying extravagant premia to get growth outside Japan, where there's an aging population and population decline. So there are secular reasons for this, and there are cyclical reasons for it. But basically, you're going to see more consolidation.
What about the whole advertising climate? Has Netflix changed the game in terms of what people are willing to pay for if they can avoid ads?
No, I mean, it's not Netflix solely that's changed the game, but we're seeing the development of digital media. It's 40% or close to it of our business, whereas 15 years ago it was virtually nothing. Just like the fast growth markets were about 10% of our business 15 years ago, they're now almost a third of our business. So the world is changing both geographically and technologically. The Comcast in investments or potential investments, we're an investor in Vice. We own just under 10% of Vice, of Full Screen as well, 100 YouTube channels that Peter Chernin has put together with George Stroumboulou. And last but not least, Media Rights Capital, which brought you House of Cards through Netflix. There are alternative distribution channels, and media owners are looking at these changes. If you're running a legacy business, you have to make sure your legacy business becomes as digital as fast as possible. Your digital properties expand as rapidly as possible. And thirdly, that you invest and experiment. We've invested in Refinery 29, which is millennial content for females. Vice has launched its Broadly channel with our second largest client, Unilever, sponsoring it and backing it. So everybody is experimenting in that sort of third avenue, getting your legacy businesses to move, getting your digital businesses to move further, and then investing and experimenting is critically important. You have some that win and some that lose. People tend to talk about, just like ourselves, the wins rather than the losses. But everybody is experimenting to see how they can capitalize on the new trends. Netflix, a non-advertised medium, has penetrated very heavily. It's not profitable as yet, but it's getting increasing momentum, for example, in Australia. And these changes in how consumers are spending their time with new media, how the industry is investing. In our case, we have a portfolio of $76 billion that we invest on behalf of our clients in media. Our biggest investment currently is Google, which last year was around $3 billion of that 76. This year will probably be around about $3.5 billion. So what we're doing is experimenting in the same way as our clients are, as media owners are, and indeed some of our competition are trying to do.
Well, Martin Sorrell, we look forward to getting an update from you on how some of those investments work out in the years ahead. Thanks so much. I'm Rhonda Schaffler for The Street.